Today's number is 5 because we do not see this happen in markets very often. But what could the retail trader and margin debt have in common? Well, over the last couple of years, we've seen these rise back up. And you guys may know that this is one of the most important statistics when it comes to seeing big bubbles. So with the markets rallying higher as we suspected last week, we're now reaching a call wall. And of course, huge moves on certain key stocks in the markets when everyone thinks they're doing nothing. What is in store next? Well, it turns out the next couple of sessions are going to matter a lot. And it's because we're starting to see euphoria get trapped back in. Are we about to see a big sell-off? And should we be buying the dip? Let's take a look now at stocks, commodities, and cryptos to break down everything that you need to know about markets right now. Well, welcome back everybody to The Daily Show. My name's Thomas, and in today's video, we'll be discussing everything that you need to know about markets, from the macro to the data to, of course, the key flows, and a new number one on a stock sector that you probably are not thinking about. Yes, there's a lot to go into, but we'll start things off with the lay of the land when it comes to debt. Because, guys, we are at all-time highs. Take a look at this. Not only are markets going up in unprecedented fashion, but we are now hitting new peaks when it comes to margin debt. And in fact, we're smashing new highs here when it comes to debt. And remember, this is only one way that you can track it here in 2025. Do we expect to get it even wilder? Yeah, generally you do. But do remember, all good things do eventually come to an end, especially when it comes to this amount of leverage in the markets. So the next question is, well, will we see pullbacks before this type of thing explodes? And I think we've been discussing this now for about 2 months, which is that the months of August, September, October tend to be more volatile. They tend to have, of course, a lot of different sector rotations in them. And sometimes we see a little bit of a pullback. It's traditionally the second pullback that you get in the year, usually one somewhere around Feb, May kind of area, and then you get one around this period now. Now, why is this important? Well, notably here, there are some charts going around that show here, including this one from Seth Golden, that shows that the PCC, so that is the equities put-call ratio, hit one of our favorite levels as well, which is at 0.45. Now, you guys know that when we get extreme amounts of calls or we get extreme amounts of puts, we tend to be looking for tops or bottoms of markets. Does it happen like that? No, generally not. But take a look at this. Every time we've hit 0.45 over the last kind of year and a bit, we've actually seen a small dip in the markets. And this makes some sense as we head into October and, of course, the back end of September being some of the weakest months of the year. It also makes sense when we take a look at some of the other stats we've started to see. Very bullish markets with extremely overbought RSI. What happens when we get reads like this? Well, markets may go up, but generally 2 weeks later, they've actually never been up in similar circumstances. Now, of course, this could be the year that bucks this trend, but one thing did happen, and that was that we made a new high last week, and we suggested, or we thought about the idea that we would probably push for a couple of sessions higher. Well, now we've done that, and we've managed to make that next call wall level. And if you're not familiar with what a call wall is, basically it's where a bunch of options are sitting on a big level strike, and it can act as what we call a resistance zone, or a zone where effectively some buyers will say, you know what, I'm going to sell. And if that level is therefore broken through, it creates what we call a positive gamma event. Now, why is all of this very interesting? Well, it has to do with us, the retail traders. It turns out that retail favorite stocks are absolutely rocketing. And unfortunately, this is not necessarily the best of news when you take a look at where we are at. So we are, of course, at those all-time highs. And this has happened back in 2021 and, of course, recently, and off the lows in 22. Now, lows, cool. That's fantastic. It means that we might be moving back up into a bull run. But when it happens at all-time highs, it starts to show us that maybe there's a little bit of euphoria in this market. And of course, some of you might be saying, well, that's been happening for a while. We've also seen over the last 5 days, the best sectors have been some of the ones we like. Of course, one of them has been gold. The other one's been semiconductors, which had an amazing breakout about a week ago. And then, of course, technology and metals have all been coming as well. And when we see these, remember, gold may have been a little bit of a secret kind of trade investment a few years ago, but now everybody's talking about it. And you'll see that there are some exceptionally high inflows into that later on the video. We've also seen the biggest monthly jump in high beta Momo in history, which suggests that, of course, it has been a skyrocketing movement here in markets when it comes to more the retail trading stocks and, of course, those growth stocks across the board. Now, when else has this happened? Well, again, sometimes it happens off lows, but it has also happened, as you can see here, during that 2020-21 period, and indeed during a couple of key periods around those significant lows. Now, is this a bad sign for markets? I think it's a good sign if we get a pullback as to the intentions of what the market's going to do, but at the moment, it surely is showing that markets are pushing and pushing and pushing and squeezing those shorts, and eventually, of course, they snap the fingers and they do eventually cause high volatile periods. Now, why else is this important? Well, retail imbalance, guys, is also going up. Retail traders are just absolutely flying into this market right now. And in fact, last week, retail flows hit their highest in quite some time. And you'll see the tale here of why it's important, because often it does happen right around periods before we get kind of, some significant issues. Now, this is the thing. Retail imbalance, sure, it's there. Sure, there's hedging. Sure, there's positive gamma. But I think there are other tales to this story. And one of those is margin. Retail traders are going for the risk. And it's the rise of the single stock ETF that I think is the most concerning right now when it comes to over leverage in these markets. Because look at all these codes here. These are all single stock codes that are providing, 3 times lever on these stocks, which to people that may not actually be aware of what those risks are. Now, this of course creates one of those perfect opportunities where if the market sells even 5 or 10%, then in some of these stocks that could look like maybe something upwards of even 30% decline for people that are in these levered positions. So you've got to kind of put yourself in the perspective of, is there going to be a very good trade for Wall Street to make to actually liquidate some retail traders? And I think that's starting to become a possibility here as we enter into October. Remember, based on the Wayne Whaley data stat starting at the beginning of September, we kind of thought that September would be bullish and that October would actually be the bearish month of this year. And that's kind of the story we've been talking about because it seems the most plausible. But we've also started to see some large transactions come through. In fact, we got the largest transaction ever recorded on Bank of America near its all-time high just 48 hours ago. And this is a fairly big one. Now, this, of course, did line in a little bit with that OPEX situation, which obviously is the quad witching. But we also saw some big ones coming in here from JP Morgan. Now, take of that what you will. Sometimes it's been buys. More recently, the big trades have actually been kind of more around dips or consolidation. But yes, still interesting to see this here. And we'll have to wait for more information to find out whether there's too much edge there. But why is this all important? Well, it's the time of year. This is historically, if we average all of the years going back all the way into like the 1920s, then you generally find that this period of time is the technically weakest period in the year. And because we just hit an extreme overbought read, that signals that we're usually in a pullback in time, which is a sideways market, which then continues in the trend, or sometimes we do get a little bit of a pullback. The garden variety pullback, by the way, if you're looking for one, generally is around 5 to 8%. It's not actually as interesting as people think. Everyone thinks it's going to be 10, 15, 20. I don't think so, not with that kind of Momo read. Generally, when the momentum's like that, even if we get volatility, the market will try to buy it up fairly quickly. So could it be happening soon? Here are the stats for, of course, the last couple of weeks here of September from Wayne. It's, semi-compelling towards the possibility of a short this week. Obviously, 8 to 22 is clearly more bearish. But I think the thing is, it's also about what sectors are you in. Gold miners in particular, gold looking absolutely ballistic. I mean, we've been super bullish gold, but gold just keeps going from strength to strength to strength. Have a look here at this Tavi Costa chart. Gold miners to gold ratio, it is flying right now, guys. Look at that thing. Breaking that downward trend line, absolutely just going ballistic. And while I still think the gold miners are starting to get pretty expensive, it's clear that at the moment the momentum is behind those stocks. And you can see why when you look at investors, they're buying gold ETFs in more and more and more amounts of money. And the flows just hit I think it was like a 3-year high in terms of overall flows. So if you've been following gold stocks, silver, gold, you've been following this channel, you're probably sitting there with, you got diamantes in your eyes, because I'm telling you what, it's been a pretty good couple of weeks, months, and years indeed for those. Is it about to end anytime soon? And, I'm still upgrading my gold thoughts. And, while I do think there's going to be an extreme point of volatility at some point for that metal, it's not really worth considering when you consider the fact that it's got so much more upside as well. It's a very, very strong metal in the times that we're finding ourselves in. Now, why is that? Well, take a look here at the US dollar. It's having its worst year in decades. In fact, I'm going to be writing a piece on this over on LinkedIn. Check out the links and pin comment down below if you want to follow me on LinkedIn about what my thoughts are here for the dollar, because this is a very bad year for it. And you can see here that it's historically quite rare. The Financial Times a document here basically showing you that it's the worst year on record for the dollar, as people claim they're losing faith of course, what has been the major currency out there. Is my concern for the dollar to, fail over time? No, but I do think still that ultimately the dollar will probably weaken over the next, 6 to 12 months. It tends to do so in similar geopolitical situations. Now, the other thing is remember at 2025, the start, that was one of our biggest themes, the weakness in the dollar this year. And that has, of course, been a decent trade. Now, nearly 4 years without a new high for small caps. Now, this is an interesting one because it's been a long time. Ryan Detrick puts out some good data, and you can see here that when this happens, when we go to a new all-time high for the small caps after a while, that does tend to beget further strength. So it basically means that if we again do pullbacks, that there's a decent chance that the markets will go up. And that's also backed up with when we're looking at all-time highs and Fed rate cuts. Whenever we get these types of two things together, it's actually got 100% read here. You can see Blue Kurtic Markets Insights kind of showing here that 12-month changes are pretty good. So again, if we get dips, tends to mean that there's probably a little bit more of a rip coming through still. Now, when we also have a look at the way that this market is recovered, remember it was the third fastest recovery ever recorded. And that puts it in a very, very strong field when it comes to these markets. Do they tend to go further than people expect? The answer is yes. At the moment, you'll see very scary macro. The shipping, the delinquencies, the subprime, the credit cards. And don't get me wrong, we're going to keep covering it on this channel because you need to know that that is out there. It is a problem. But the thing about it is the market and the economy can kind of disregard each other for a while, and the market can shoot off thinking everything's all good, we're going to get support by the Fed. But what do you know about the Fed? If you pause the video right here, just remember the Fed is always behind. They're never in front, guys. They always stuff it up because that is the nature of those big cumbersome central banks. Now, when they do these cuts within all-time highs, remember again, if we do get dips, the odds are in the bulls' favor at this point because, of course, there are generally more rips to come. And that also lines up very well with our 1998 narrative, which has been the narrative that we've used all year. It's not just, though, if the market keeps going up. It's also if the market goes up with the large cap stocks. Remember, the large caps matter. The small caps are actually dangerous for the longevity of this market. And funnily enough, it's actually pretty normal for an average, if recession, for after the cut, the markets to go up a bit, and then to have that significant sell-off and then to actually decline over time. So just remember that is still a structural thing. Remember, we won't really know whether the markets love themselves until pretty much the first 3 months post-cut, which takes us into the end of the year. That's when we're going to know a lot about structure. Follow the channel. We'll go through it together. Earnings going up, yes. Is that a good sign for markets? Yes, that is, of course, a good sign. And here is the stat of course, the last couple of weeks that we've been bringing to your attention. The big thing we've been talking about here together, guys, has been that October seems to be the most likely when you consider all of the nuances of this year. The fact that everyone's so clear on September being volatile. Okay, statistically it has been. We've talked about August, September, October every year here on the channel since 2020 when we started doing this channel. So yes, we know. Now everyone seems to know. But interestingly, when you consider what's happened, it turns out that October is probably the weakest if it's going to be any point. And in fact, take a look at this. It's October 21st to 28th. 3 up, 21 down. So wow, that is an interesting stat by itself. Let's jump into the charts and have a look at the S&P to start off with. The advanced decline line is actually going down a little bit, which of course is a small concern here on the weekly. We have hit what I would call some extreme overbought action. We just printed an extreme overbought market. So what this means is that generally speaking, when you get these, you go sideways or you actually go down. In fact, the chances of too much more than maybe a week or something of up ticking is kind of rare. You can see the last time we sideways for a bit. The last time before that was a while ago. It doesn't usually happen. We went down a little bit. We went down. We went down. So the thing about this is that it's not really a point where I would say, wow, you have to be FOMOing. Is that a big candle? Yes. Is this a dull market? Well, it was dull. It's started to accelerate. But as it squeezed through this level here, the most logical conclusion was 6,700. In fact, a year ago, I actually talked about October. And I remember that my prediction at that point was 68.50 by October of this year. Now, I'm not sure if we'll get 68.50, but I'll tell you what, I'm going to call that a relative success because my other prediction was that we'd have over a 10% sell this year that would be bought up. So both things happened. Did I know it was going to be, almost 20% or 20% sell off due to tariffs? No. But of course, that was the statistical likelihood based on, remember, the structure of the market. So we've got a good, exciting update as well coming up soon. We're going to be doing a Brisbane event, free event for anyone in Brisbane, Australia. You guys got to come down because I'll be doing a special one there talking about my thoughts on 2026. Let's now go through here, US 500 to start off with. You guys can see that the market is, of course, quite bullish. Very tough to sell it. Very tough to want to exit it or anything like that. And, just really just one of those markets where you say, okay, I'm going to go to single stocks and find the opportunity. One of the things that we've been doing recently in our private community has been finding stocks using my replicable approaches and then, of course, creating setups for it. And that's been working incredibly well. So, I mean, some massive, massive banger stocks there over the last couple of weeks. Now, let's have a look here at the S&P for a second. 6,700. Now, this is a huge level. I mean, it's a call wall. There's no doubt about it. It's a resistance point. You can clearly see here that we've kind of reached an area of extreme intensity for these options, and that basically means that the market may have a little bit of problems getting through it. When it comes to Tesla, 434, obviously 450 is kind of the target we've had on the option side, so it's kind of trundling up there. And Nvidia approaches one of its most important levels, 185. And you'll notice the positive gamma starts after that, and that also is a breakout high. Now, if we get through 185, guys, I think 200 is likely. And remember, if you look at it as a multiple back into growth multiple, that is, it goes back to one of those 40, whatever it is, 40 something PE ratio forwards, then we're actually looking at $250 or something like that for Nvidia. So it's interesting to see the stock. We covered it a week ago. I still think if it breaks 185, that's kind of pushing towards, okay, well, maybe we'll just have to keep going up for a bit. But at the moment, remember, semis are up. Bonds don't seem to care about any risks. It's just purely has Wall Street trapped enough retail traders in leverage? Because that's the only reason I could see us selling at the moment. And the reason I think it's going to be inflation concerns and growth concerns and some other rubbish that they put in the news. Remember, if it's in the press, it's in the price. It's likely based on the stats at this point, depending on how we sell, that pullbacks will be met by bull demand. Now, over to, of course, Bitcoin, we saw a little bit of holding yesterday. 63 is the key level here on the IBIT, and you can see here a few puts coming through. Key level, I still think, is going to be 70 in the future, which you can see is a very heavily held call when you go to the October options and OPEX for that month. But yeah, 63, one to watch, and of course, line that up with your Bitcoin price. Gold also moving through 345, getting into that positive gamma again. So this is actually pushing higher. You'd have to say gold looks pretty solid on the charts and does look like the bulls are back. Let's now go over to the lead indicators. Yields. People are asking me this all the time. Why are yields going up? Because people have already said, wait a second, we might have inflation concerns. That could be a good storyline for the street to see a sell. You'll also notice here, US 10-year has been bouncing up as well. 20-year, 30-year. Remember, the short yields, that is the 2, the 3 months, all that, that's controlled by the Fed. The long yields, that's the market. And the market's suggesting that we might have an inflation problem on the future, or at least we won't be able to cut as much as expected. When it comes to American consumer, even though the American consumer is pretty much made up of like the top 10% of the population at the moment, the stocks are going well. So nobody seems to care. And that's usually risk on. And RK has been rising, as we've been suggesting on this channel, which means it's risk on. So it's risk on at this stage. IWM and NDX holding very well, broke to a new high, again suggesting that there is risk on broadening formation. And treasuries are boring, which is pretty normal. Unfortunately, with treasuries, while I still think it's going to go 92, 93, and 100 ultimately, it can take a while. So just remember that. We'll probably update that when key levels are hit. Now, when it comes to currency trading, if you were brave enough, which you could have been around here, to sell dollar, then yeah, it wasn't too bad a trade actually last 24 hours. Anyone do that? Let me know in the comments down below. But basically, we hit this supply. We've had a bit of problems. It's obviously rallied up after the announcement of the Fed rate cut. And if it breaks through this 97.30 level, then we're probably heading on up until around 98.10, 98.20. So there's a couple of good currency trades, I think, coming up if the right things happen. Now, what about gold? Well, technically, the first take profit has been hit. I thought 3,700 was pretty awesome, but 3,750, I think it actually hit it. Let's have a look here. 3,750, I did get alert for that. So it hit the zone that I thought it would. Now, I wouldn't mind it consolidating here, but I'm sure some of you just want 4,000, 4,200. I might even have to upgrade gold again. But on the technical charts, 4,000, 4,200 still my target. And silver has been very good. That looks like it's going to have a go for all-time highs. You know, $50, 48, of course, first target. But yeah, looks very, very strong on the charts. Hard to go against either of those metals right now. What about oil? Well, oil is lame. This thing is not finding much bid right now. The horrible geopolitical tensions commodity is always a risk. But you'll notice here it's still making a series of lower lows and lower highs on smaller time frames. So we need to break a 63 plus to even get any bid back. Be careful on this one, guys. I have been talking about the possibilities of bullishness here, but I'm just not seeing it yet in the charts. Not a really strong bull bid just yet. Speaking of bulls, though, semiconductors. You know, that's up. It's up, guys. And when the best sector is up, it's very difficult. I wouldn't be bearish. I wouldn't be going against the market at that point. And then, of course, the NVIDIA trade paid some divs. If you were, I guess, you know, strong enough to buy over here, you're up a few percentage points now. Maybe got a little bit scary, but obviously stops had to be under here. And this is off the back of all those announcements. If it breaks a 185, it goes positive gamma. That's suggesting a 200 potential. And, of course, yeah, it's going to be difficult for markets to go back. So it's at resistance. You can kind of see what's at stake here now. You know, we've got a NVIDIA at positive gamma levels. If it breaks and closes high, it suggests there's more market momentum to come. And it's going to be a little while before that extreme overbought action actually gets volatile. When it comes to Tesla, it didn't quite get 450, which is the current target, but it is still dull and pushing up. I wouldn't short it. And Russell 2000 is kind of just chilling on way up. So it's, again, looking fairly strong. NASDAQ, extreme overbought. Now, again, extreme overbought is what it is. It's not guaranteed, but it tends to be fairly good read. So it's pretty rare. Sometimes we can push it, and it can go for maybe even a few more days. But generally speaking, you're probably going to see this price again within the next few weeks. So I think I would just be like, chill. You know, it was chill. We just need to chill. It's all good, all green, all good. Now, what about Bitcoin? Well, Bitcoin came into the first level. So I think this 111.6 is a very interesting zone. See some buying coming off it. Anything really in this 110 to 111 area, I think is going to be quite key. And this is, of course, one of those areas that you want to be targeting should you be a bit of a bull on Bitcoin, because it's going to be a good fib. It's going to have some stuff. I'd be looking for a bid. If we don't see a strong bid, then that's a problem. Tom Lee is talking $3 million. I see that one every day. $3 million. Every time I load up X or I load up a YouTube, it seems to be Tom Lee said $3 million. I can't believe how many people have been quoting that. But you know what? Hats off to him always. We do love a good Tom, guys, because you know, I like Toms, same name as me. You know, he's $3 million. I mean, yeah, it's a big number, but if he gets to say that, then I get to say $7,000 gold. Why not? We can do that. But the problem is, I'm going to say end of the decade. So you know, I'm giving you a lot of time. You know, I'm going to $7,000 gold. Why can't I say $7,000 gold? We'll go there. All right, let's now move over to calendar and have a look at what's ahead. So, of course, there are a couple of things. On Tuesday, we do have some PMI from everyone in the world. Then we have our good friend Chair Powell coming out to annoy us. Remember, 12:35. Who knows? 12:35. Why? I don't know. But he's coming out 12:35, so he might say something to annoy the market off. Then we've got GDP. That might be a shocking number, but who cares? Everyone knows what it is. And then we've got that core PCE index, which the Fed often uses on Friday. So I wouldn't say like it's a extreme kind of news event week, but do remember, look at these FOMC guys. Look at them. They're all coming out. Look at them everywhere. It's an FOMC festival. They're all having a chat. And I'm sure some of these will be like, I want to cut rates like 25 times. Why not? That's the type of thing that could happen here. And then we've got daylight savings around the world, which will be its own event, especially when it comes to us doing live streams here from Aussie. The markets get late, guys. Don't ever say that someone from Australia or New Zealand doesn't love America when it comes to trading the markets. 1:30 a.m. becomes the open for us. Whoa, it's brutal out there, but you know what? You got to do it when you're going to trade the best innovation. What are you going to do? All right, guys, if you enjoyed today's video, please remember to subscribe, smash that like button as well. Check out our courses if you're interested in finding out more. I have to suggest Day Trading Masterclass, Options Advanced, or of course our Advanced Overall Cycle Analysis. I think you'll enjoy it a lot, which is the advanced class. Otherwise, follow us on X and definitely follow me over on LinkedIn. Comments and description down below. I'll be writing a little bit about the dollar soon. In generalities here, is the market overbought? Yes, extremely. Does that mean it has to sell? I would think this price is going to be revisited, so I would have not much FOMO here. I think my FOMO level would be going to almost a zero neutral at this stage. But as an investor, you wouldn't be worried. Why are you worried? At this stage, there's too much MOMO, and everybody seems to want a piece of the American market. So even if it pulls back 5 to 8, 10%, unless it does it for one very scary reason, and that's not inflation, then generally speaking, I think it's kind of like looking all right, guys. So thanks so much. We'll come back to you with a new video very soon. Bye for now.